Hello, everyone, and welcome to our WebEx on financial solutions for the buying season and beyond. I am Bob Laclede, Vice President of Channels at MX Group, and with me is Jonathan Terry, who's our CFO. We always call Jonathan JT just for short. I sometimes refer to him as our financial wizard as well. So welcome, JT. It's a pleasure to have you here today.
Thanks. Glad to be here. Looking forward to this discussion.
Good. You know, there's the old saying that always talks about behind every good man's a good woman. I think in what we do in Channel IT, it's really behind every successful sales rep, there's some financial guy trying to figure out how to finance the various crazy deals that me and my counterparts will crank up. So you are that guy for us. So I thought we'll kind of talk about generally what goes on.
Yeah, I'm glad to be here. There's a lot of things that now, as part of the broader Arrow company, MX Group can offer out there to the channel partners. And we're going to spend a few minutes today just to talk about some of those financial solutions, give people some examples of how we can all work together, some of the do's and don'ts, and most critically, who you can get contact from to enable you to fulfill sales in a more efficient and expedient manner.
Perfect. So all of our finance options are part of what we call our government business infrastructure in our financial solutions. And I thought maybe, JT, today we'd kind of highlight probably 4 areas. I know there's various shades of how we do these, different sides, but they seem to all kind of fall into 4 big groups for me. One just being net terms and prompt pay discounts, escrow and lockbox, certainly public sector financing, and then flex pricing. So that sound good to you, at least on big categories?
Yeah, definitely. We've got some fairly simple things we can talk through and get into some more complex, very creative solutions that we can help to generate some incremental business as we head into this busy buying season.
Perfect. So yeah, I know those 4 are kind of a simplified look at some of the things you go through, but I thought maybe these are the kind of the logical groupings. So let's start with the first one. We'll talk about net terms and prompt pay discounts and what those look like. So this is the one we tend to use most frequently, correct?
Definitely. I mean, this is a normal type of transaction that we'll look to work with a partner on. We're looking to evaluate what the type of opportunity is in line with normal business transactions, where we're giving the partner a credit line that's sort of commensurate with their financial standing, how much business they've done with us. Also looking at the types of relationships that we've been having, their historical work with us. We're going to look to give the partners a certain amount of credit where we'll obviously need payment within a certain period of time. Now, again, I'm being deliberately vague because those things will flex, will move, and specifically when we go into buying season, we're going to talk about how we can work with partners to look at extended terms, increased credit line flexibility, because we know that we need to provide that degree of financial flexibility and support for the channel partners.
Yeah, and certainly I know I get the report daily on how you flex credit lines up or down depending on what's going on, and certainly in Q3, that August, September, October time frame, you flex them even more. So any kind of rules of engagement as you hit kind of September that with a partner you're looking at, if they've got a normal credit line of X, is there a rule of thumb on what you're trying to do with the seasonal flexibility?
What we want to try and do is understand pipeline and understand pipeline early so that we can be prepared. We want to get in front of things as quick as possible so that we know these deals will come up and hopefully large transactions will be there in the pipeline for everybody so that we can react accordingly and flex in the most appropriate way. It really is a case-by-case basis, but what we don't want to do is spend a disproportionate amount of time in ensuring that we understand those opportunities. Hence, getting that pipeline visibility early means we can react in a really quick way.
Get us the information early and often, right?
Most
just
definitely.
so we can react to it. Good. So the incentives for quick pay, how do you kind of change that if somebody's got the money up front that they can help, or instead of coming off net 30 terms, what do you kind of look for in those kind of situations?
In these situations, for example, if the government is paying for the partner quickly and they want to turn around and sort of get some incremental margin, we can have those conversations. Again, engage early with us. Let's understand if you're in a very healthy cash flow position and you want to get some incremental margin, we can talk to you about what incentives we can provide.
That's great. I like that one. Okay, so let's go on to Escrow Lockbox. It certainly gets a little more confusing, but I always think of Escrow and Lockbox as kind of like my mortgage when I'm taking out a new mortgage. The government kind of pays into an escrow account and then it gets dispersed, correctly?
Yeah, that's right. So these types of transactions are where partners may have a significantly larger transaction than they would normally see in their normal course of business. Hence, our credit line isn't really supportive of being able to offer that using a traditional net terms, but using this escrow process where funds flow into the bank account and then disperse both to the partner and then to IMIX makes it a much more feasible transaction for us to be able to facilitate with the partner. The great thing is we are very accustomed to doing these transactions. Even for new types of transactions with partners, escrow processes and accounts can be set up the same day. So you're not talking about needing to wait 3 to 5 days to get a response. We get very quick turnaround. We have a great credit team and a great partner account management team who can work with you to get these deals done very, very quickly.
And I know the bank, whoever is holding the escrow account's got very specific instructions on, of this deal, how much is going back to the partner, how much is coming to IMIX to pay for the product sales. So there's really no guesswork on behalf of who's going to get what out of that transaction, correct?
No, everything's defined up front. The forms, the procedures, very clear, very simple, very transparent for everybody that understands how the transaction will play out, where the funds will flow, how much and when. It's almost foolproof.
So with this, though, the government plays a role as well, right? They have to know where to pay, where that check for that transaction goes, correct?
And that's what we'll work very clearly up front to define, to make sure the paperwork's very clear of where the funds should flow, so the government entity knows where this money needs to be put into. On all of our documentation, the Escrow Lockbox number is very clearly defined so that hopefully everything should run very, very smoothly. If there are hiccups, we do have teams that are very averse at dealing with these transactions and can help along the way.
Good. So I like that one. The next one, and sometimes I think these get a little more complicated as we get into it, is just the various ways we finance deals, especially when the government doesn't have all their money up front and they want to finance something over some number of years. I often hear option years and 4-year options and payouts. So talk to us a little bit about public sector financing.
So when we get into this realm, there are a plethora of opportunities and solutions that we can provide, from things where we have to just talk about the difference between CapEx and OpEx if the government needs to treat things in a certain way, things about a lease to own and a buyout. So there are probably half a dozen very simple transactions that we can offer in this broad arena. Lease to own is probably a great example where, again, the people want to have a choice at the end of the financial solution. Good thing that we can do and encompass in here, it's not just about physical products. There are software licenses that can be put in this public sector financing as well. So we can cover both the hardware and the software environment. When I try to think about this allows us to have a lot of flexibility across multi-year events, and it also enables us to work with, IMIX to work with the financial institutions who can take on some of the risks that may be associated with like multi-year when funding is removed from the government, when they have rights of termination. We have ways to deal with those types of transactions leveraging our financial institution partners. So
your financial institutions are aware of the government and all their funding out clauses, and what happens if the government does another shutdown or sequestration and all that?
Yeah.
They know how to take that risk.
If the government simply wants to terminate for convenience, or there's termination for non-appropriation, things like that, these financial institutions that we leverage are fully aware of how to deal with these things and build that into the solution that they offer.
Good. I'm seeing this one getting used more and more, especially we talked earlier about the larger transactions. This option seems to be coming up more and more frequently, which a number of years ago, 4 or 5 years ago in the government business, I didn't see much of this. This has kind of become interesting. So good one.
It's a great transition as you see that governments are trying to plan for longer-term IT strategies which have multi-year elements to them. So I think this is definitely going to become more and more prevalent as we go through the next 1 to 2 years.
So perfect. All right, so let's go through one of the options that we got when Arrow acquired us about a year ago, something called flex pricing. And I was talking to someone earlier today that said this is kind of like the cloud model. You kind of pay for it as you use it, right? Kind of reminds me of my cell phone plan. More data I do, I take this month, the more I pay for it, less data, I pay less, right? So
most definitely. Definitely a utility model is how sort of a broad categorization for it. So this is where you have whether this be a storage, a service kind of solution where there's a minimal level of requirement that the end user is looking for, but they want the flexibility to scale up and only pay for that incremental usage and not to have 5 new arrays put into their data center and paste that all up front. They want to be able to pay for it when they're utilizing it. So it's a great way where we can do this consumption-based model for the government. A lot of complexities to this, a lot of details that are needed to establish what that baseline is.
Right,
but again,
because the configuration can flex up or flex down, right, based on the demand.
But again, complexity that we found a very simple solution for, leveraging, again, one of the financial institutions in-house that we have here at Arrow to enable the government to look in an environment where there's that variable workload, where, again, they may not have the solution fully scoped out yet. And again, we know that there is a lot of ambiguity, especially in cloud-based solutions and emerging technologies. So again, this financing solution is a great way to be able to provide that flexibility for the customer.
Yeah, and I like the ability to flex up or down the IT configuration based on need. So let's talk about do's and don'ts. You mentioned one of the do's earlier, get with us early. It's kind of get us the information early and often so we can work on all the options here, right?
Yeah, the earlier we can get engaged in the process obviously gives us a lot of time to ensure we understand what the requirements are and what things that are there in terms of opportunities and options from a financing solution. Really critical that we ask those qualifying questions with you to ensure that we can come back to you with the right solution. Like I said, we just talked through very briefly 4 high-level areas where we can provide opportunities, but obviously more specific that we can get, the better and more tailored to the solution we can come back with.
Well, I guess you could, those 4 big areas we're talking about, we could be talking about one opportunity that could be using any one of those 4. So it could be different pricing options even the government might want to see on that.
Sure,
so.
And you may even find instances where you're doing combinations of things where we have certain parts of it done with maybe an extended terms. Others where you want a flex pricing solution for the hardware element. So definitely engage early with your channel partner and with our in-house credit management team to ensure we can provide you with that right solution.
Right. I guess the don'ts. I always hear, especially from the smaller partners, that I don't have the credit worthiness to take down some of these large enterprise deals. True? Not true?
There's never a deal that we won't want to hear about and understand what's the right solution that we can provide. Size, yeah. Size and history is a great indicator for us, but again, there are many opportunities that we've explored that we've gone outside of our traditional swim lanes to facilitate with a channel partner. So again, don't think that there's a deal that's off the table. There's definitely considerations we can put across everything.
Right. So to scare you a little bit, I often tell partners I've never seen a government deal of any size for any partner that I can't finance. But that usually means that you can't figure out a way to finance.
But definitely we are now in a much stronger position with leveraging Arrow's capabilities, Arrow's network of financial institutions, and the in-house captive ones that we can also choose to.
Perfect. I'm excited. It gives me a lot of options. All right, so who to contact? Certainly early in the deal as you think the opportunity is coming together, not after you've got the purchase order. Certainly get together with your Immix Group channel manager, account manager, phone number, email there for our Partner Alliances team, or connect with JT or myself. So, JT, any closing thoughts? I think we kind of covered the waterfront quickly there, but.
Yeah, I think there's a lot of opportunity here, and again, a lot more devil in the detail, but you've got the right people to reach out to have those initial discussions, and a great team behind them to help support, get into the details, and close those business.
Good. Well, thanks for joining me today, and good luck to everybody in the buying season that's coming up.